Hello traders. So today I want to show you exactly how to use Fibonacci retracement to get the entries, to know where the price will retrace back to, and also to perfect your entries. So I want to assure you that after the end of this video, you will be able to understand how to use Fibonacci retracement, how to set the Fibonacci retracement settings exactly the way I'm using. This is perfect and it's 90%. I believe in Fibonacci retracement. It's the best way on how to get the entries. So long as you understand the trend of the market, you understand the direction of the market, and what's required for you to enter a trade. So there is some few factors that you need to know. For example, let's start by introducing Fibonacci retracement. So before that, at the end of this topic, make sure you subscribe to my YouTube channel. Make sure as well that you follow me on TikTok and Telegram group. I have the group link under my description. So please join my Telegram group where I'll be sending my setups and also my educational content. Remember, this is only for education. So at this point, Fibonacci retracement is used to determine the end of the retraction movement. It is used to determine the end of the retraction movement. Usually the price retracts to 50% or until the OTE, that is 0.62 to 0.75, 0.705 or 0.79 before another impulsive move occurs. So let's check that. So this is the Fibonacci retracement and how it is. In the first place, make sure that you identify the key point or where the price the key point in the first place. For example, at this area you can see it's the liquidity area, liquidity zone. This is a key point. So after the price change the character, or after the price make a shift from uptrend to downtrend, then it came up to this point and then retraces back. So how will we know that the price will retraces to a certain point? I want us to use these examples. I have scenarios where I've used Fibonacci retracement, and it's not this one. This is just a few examples, but Fibonacci retracement, I usually use them. So for example, we have this zone. Let me just remove this at the first point. Now we have to see this. So let's check on this one. At this point, the price is going up and we are seeing the break of structure has happened. We have seen the break of structure. At this point, so meaning that the price will proceed, will still continue with the trend. So that is what we need to know. The price will still continue with the trend. So what we need to know is that we need to understand if the price will still continue or not, or if the price is now opposing or going against the trend. That is after the market structure has been created. So at this point, let us use Fibonacci retracement. So first of all, let's identify our key point. So this is our key point. This is our key point. Now we have identified this as our key point. The price is going and it has broken this structure. Remember, this is a 4-hour time frame. So after the price has broken this area, it's a clear indication that the price will still continue. The price will still continue. So we need to know where the price will come back to. We start from, for example, my Fibonacci retracement settings. starts from 100% at the lower part to where? Remember to drag your Fibonacci retracement. Remember to drag 0%, according to my settings, 0% to where the price had reached before reversing back. So this is where the price reached before reversing back. I want you to understand that. So remember, this is now where we have started. This is 100% mark. And remember, it is 100 to negative 100. So this is 100% mark, 79, 62, 50, 0%. We have negative 50, negative 100. This can help you to know where you can put your TP1 or TP2 as well. So wait for the price to come back to 50% price. Wait for the price to come back to 50%. Make sure you also consider some other things. For example, we have the Fibonacci retracement. We have for example, we have the liquidity or inducement. So remember to consider those factors, and also the fair value gap. That is something that you need to understand as well. Now, let's check on that. So at this point, we are seeing that the price has been rejected at this zone. So what we need to know is that now, at this point, the price has been rejected. And it's a clear indication that the price will now start going reverse or going back. So after the price now has failed to break this area, it means that the price will now continue, or the price will be going back up. Let's see that. Now, at this point, as you can see this one, let's see this. This is also one of them. This is the Fibonacci retracement. I want us to mark the area, the key area. So this is the key area. Please learn slowly. Don't be in a hurry. I don't want to be in a hurry. So kindly, at this point, this is our key point. Also, we have this as our key point. I always use these key points. I don't take them for granted because I know they matter. They matter a lot. They matter a lot. So after the price has broken this area, so as you have seen, the price had tried to break this zone but failed to continue. But at the same point, the price came back, retraces back, and then started going up, now showing a clear indication that the price has broken or has changed the structure. The price has changed the structure from the downtrend to an uptrend. So you have to be keen at this point. So at this area, now we mark this as our key point. So please make sure that you understand every key point that you are seeing in trading. So what matters are the key points, and these key points are, for example, fair value gap. We have the order blocks, that is mitigation block, breaker block, and those other blocks. So at this key point, bring your Fibonacci retracement tool, start there, click your mouse, then drag to where the price had reached before reversing back. Okay? So now you have seen what has happened. The price reverses back to this zone. So usually you can also consider putting your stop loss at around 79%. So Put your stop loss at 79% to avoid being taken out. So don't put a very tight stop loss. So you can start from between 60 and 50. That is where I advise people. 50 and 60, your stop loss should be at 79%, and also target maybe at the first point 0.00%. That is where it will show if it will go or now will reverses back. Let me see. Okay, so that is a good setup. That's a good setup. So let's see that. Yeah, that is good. I want to show you, don't forget, I want to show you the settings that I'm using in Fibonacci retracement. So please make sure that you identify or make sure that you learn how to use this. I want to show you how to use the settings that are in Fibonacci retracement. So please stay calm. So you target at first point 0% and also at 50%. So this is the importance of having this 50 and 100% because you are seeing negative 50% goes like at the same point with this liquidity. So it can help you trace where you can take your profits as well. That is one. It is simple. So let me just eliminate this one. Now, at this point, because you might get into the market and you realize that you have what? You are late. Maybe you are late. You can as well use this as your liquidity or as the key point. This will be a very good key point when you go into the lower time frames. Remember to use this Fibonacci retracement on lower time frames, for example, 15 minutes, because that is where you get your entry. So I'm showing you on 4-hour time frame, but as well, it's good to use at 15 or 5-minute time frame so that you can get a very good stop loss and yeah, so that you cannot risk a lot of money. So at this point, let's consider this as the key point. Let me bring my Fibonacci retracement. Make sure you start at this point, click that point, then drag your Fibonacci retracement slowly to where the price had reached before reversing. So remember that before reversing. Now, consider placing your entries at the mid of 50 and 60%, or if you put your entry at 50%, make sure you have the margin or the money that will hold or can stand with you when you place your stop loss at 79%. This is a very, very, very key in trading, and this will help you a lot. Take seriously. I know you will come back telling me how this has helped you. I want to change you. I want to show you exactly. This is exactly, and I don't want to hide anything. So that is how Fibonacci retracement is used. I now want to show you exactly how to the settings that are in the Fibonacci retracement. The settings in Fibonacci retracements. Let's consider seeing this one. This is one of them. So let's check. After the price has broken the structure with a very strong momentum, showing that the price will be going up and up. So we consider our key points. Remember, at this point, we have this order block as well. So this is another added advantage. That is showing it's a key point. So at this point, we have the fair value gap showing us that it is now very, very important. So we are using two things to confirm this entry. Now, after that, we bring our Fibonacci retracement, drag until where the price get into before reversing. So let's see. Before reversing, then now we place our entries at 50 and 60%, between 50 and 60%. So that is it. Now I want to show you the entries, or I want to show you the settings used in Fibonacci retracement. Please, these are the settings for the Fibonacci retracement. So let me set a very clear space to show you the settings used in Fibonacci retracement. So at this point, just copy exactly how it is. Just copy exactly how it is. Yeah, copy exactly how it is if you want to use exactly Fibonacci retracement that I have. Yeah, you want to use exactly this one, just copy this one. These are the settings. Go to Fibonacci retracement settings, and then you add that, but test your strategy, you'll enjoy. Follow Mr. Nelson. So my name is Nelson, Forex trader, and I'm enjoying teaching you this content because I know it's going to help you. Bless me with a subscribe also as well. Like my video, comment, and if you're interested or if you have enjoyed, just show. I'm happy to show you this. God bless you guys and have a nice trading. Success.